Hello and good morning, traders. Hope everyone's doing well this morning. And we are gathered for this ECB press conference. We just had our ECB rate statement, and as expected, they raised rates by 25 basis points. So let's get into the Forex factory here, just so we can see what the expectation was. So it's in line with expectation. Remember last time they did raise rates more than expected. I think it was like 50 basis points. This time it's about 25. So again, no surprise. Remember, markets are running on what's just not what the expectation is. This is already baked in. This is already known. So what's the known unknown? Well, if there's a surprise, just like what we had back on Monday when we had the RBA rate statement, they did raise rates by 25 basis points, and the expectation was for no change. So initial price action in the Aussie was pretty strong. So here we are with the euro, and you can see markets are not running. Euro is not running on the news. So this is where I think you have to be very careful with this sort of price action, because we are not getting the similar price action as we were getting last year when we just had rate hikes after rate hike, and we saw some of the currencies did really well off of that. So here's an example of Australian dollar. So you can see the Aussie basket here, massive move on the rate announcement, and what follows is a bit of a sell-off. Very similar situation with Kiwi. They did raise rates just few weeks ago when we had a pretty massive move off of a big surprise that they had with the rate hike. So that was right here at early April. You can see initial price action very strong, and what ensued after? A sell-off. So we are getting this price action where the 1 and 1 it doesn't equal 2. Like there's a lot of back and forth, and a lot of the selling on the news that's taking place. Now let's take a look at US dollar. Well, yesterday the Fed raised rates by 25 basis points, and you can see the US dollar is actually down. Now we had the Japanese yen, Bank of Japan, who decided actually they're gonna continue with their ultra easy policy, and look what happened. Massive move onto the downside, but look what after we saw a reversal. So it's pretty clear to me that you don't want to buy the initial move, because initial move is getting to either direction, but there's no follow through. So here we are with the euro, and you can see that euro has been one of the strongest currencies in the past few weeks. I mean, let's go on a daily chart. You can see that this actually done really well. So the question is that, do I want to buy the euro or do I want to sell the euro? So right now, like I said, I've looked at everywhere. The most hawkish, RBA was actually hawkish on Monday. But then again, did not follow through or didn't seep into the relative strength in the Australian dollar. So we are seeing a lot of back and forth. So I'm not in the camp of buying the euro here. Initially we might see, right now we didn't even see a rally. So here's the gray line here. We have this prior resistance, which is now the support. If it can fall below the support, I won't hesitate to pull a short on this one. You can see that we have this moving average here, the 13-day exponential moving average, and you can see it shows like it wants to break lower. So RSI is dropping. We have the parabolic SAR going negative. So the technicals are turning a little bit bearish here. So the question is what we want to pair it with, and I think this is a bit of a challenge here, because none of the places is acting out. Again, is the money flowing to the dollar? So let's just follow the money trail here. Where is the money going into? So this is a 4-hour chart. Is the money going to the dollar? It's not. Is the money going to the yen? In the shorter term, it looks like the money has gone into the yen. Let's go with the euro and Swiss franc. Swiss franc is where the money has been going into. But right now we can see that both the euro and the Swiss franc is pulling back a little bit here. Now let's go with the euro, the Canadian dollar, and the British pound. So British pound is where we have seen more money going in, but right now it is not the one that's moving a lot here. The Canadian dollar, this got destroyed right here. Now let's go into growth currencies. So Euro, Aussie is not the currency. That's where the money is going. At the end, the only place where you can see the money is going into is the Kiwi. So this is the information that we have. And again, we try to figure out why Kiwi is the strongest. I mean, this is where you might not get the answer why there's not a whole lot of correlation. You can see the negative correlation between the Aussie and Kiwi right now. So if you take a look at Aussie Kiwi pairing, you can see the Aussie is actually underperforming compared to the Kiwi. So right now, Kiwi is the one where the money's going, and it's right now at a support level. So if it breaks lower, I think the Aussie and the Kiwi can continue to diverge. Remember, like back last year, back in October, November, December, there was a huge divergence that lasted for almost a month. So important to keep an eye on with these divergences. But right now, you can see that price action is just, we did break out and then just fallen right back here. So let's take a look at euro against the pound. Which one is showing better? So this is again, euro against the pound. It is just telling you that euro and the pound has not diverged whatsoever. So very standard sideways price action. Let's take a look at euro Swiss franc. And over here, you can see that, okay, well, Swiss franc seems to be a little bit stronger than the euro. But in the grand scheme of things, in the last 6 months, this thing has not gone anywhere. So we are in this range, this bigger range that we are dealing with here. And not everything is participating at the same time, which again makes your job a little bit challenging, because it's not about picking the euro. Like, I gotta pick the best currency against the worst currency, because other currencies are maybe not taking part in that move here. So you can see that today Kiwi is the strongest currency, 0.63%, and just not too long ago Kiwi looked awful here. We were breaking lower, and we can see that the relative strength has picked up, and right now this is where the strength is. This is the money going into. Now let's draw a little downward trend line here. So if it's going to pause, this is the area for this to pause. This is the downward channel, the price channel that we've been dealing with here. So this is the best one out there. So let's go back to euro and see what the euro is doing. And clearly euro is weakening, 0.44% down. So which pair do we want to begin with? So it's pretty clear euro Kiwi is the one that is underperforming here. So let's go with the euro Kiwi. So as you can see, that euro Kiwi has already moved a lot since last night. I mean, since the Kiwi is the best currency, this thing has already made its move. So let's start with the longer term chart on a daily. So what is the daily telling us? Well, daily is rolling over from a very key level that it broke out. So if we just look at the price action here, we have been slowly moving higher. So does that mean that this was parabolic price action? It seems like it is topping out a little bit here. So we do like euro Kiwi onto the short side, but the next level of support will be at about 74.75. It's sitting at about 75.93. So this is about 150 pips before it tests that support. Same thing. Let's take a look at other currencies. I mean, euro dollar. I mean, we looked at dollar. Dollar's not going anywhere. I know this is the most common asked question for me here with the euro dollar. As you can see, the euro dollar is being trading in a very tight range. So if you're trying to find a rally, it's not happening. If you're trying to find a sell-off, it's not happening. It's just stuck in a range. So in the shorter term, again, we're getting a big candlestick to the downside. The question is is this the level I want to enter on? And personally speaking, with this one, I do want to look for an entry on the longer term charts instead of a shorter term chart. So you can see that there is a strong level of resistance at about 110, or 110.80, I think, right here. And then if you take a look at the bottom side, we have 109, 109.60. So that's the area that it is continuing to go back and forth from. Let's take a look at other areas. So we identified that the money is going into the Kiwi, and second best currency is surprisingly yen. So this is where let's sort of break it down, yen price action too. So relative strength is strong, but notice that with this rally, we had a massive drop with the massive rally. Question is this a bear rally? Is this a rally to short into, or is this a rally I want to buy? I covered that on a currency room that, this Bank of Japan news is not new. It's a known, but we got a very severe price action to the downside. At this point right now, you can see that after touching this level, it's not really breaking out and it's not really breaking lower. I want to give this a benefit of a doubt that this is still a bear rally pattern, but at the same time, I need to see 4 hour start to roll over here, or maybe an hourly chart to roll over here. But right now, you're not seeing that rollover taking place, which means that right now, I don't want to be shorting the yen, but I want to be very cautious on buying the yen. If it does, let's say, break above this level, then I would say that we had a false breakout and we are back up again. So the question really is, which currency is acting as a safe haven currency? For the past few weeks, the European currencies has been one of the best one, but this seems to be very extended here. So could we see a redistribution here? And I think if you want to really make a note of critical areas, Kiwi is at a critical area for a resistance. The Japanese yen is at a critical area for resistance. So those two currencies we need to keep an eye on. And on the other side, we have the euro, which is also on a key level to break lower. Comparing it to Swiss franc, that looks much better. So euro would be more on the weaker side. And then if we take a look at British pound is actually holding in much better here. It's still in an uptrend. You can see that moving above this exponential 13-day moving average. But in the shorter term, the price action or the RSI is a little bit weakening here. So I'm not really super excited to enter any trade right now. As you can see, there's more reasons to not jump on anything than to jump on anything. We have the dollar. You can see the dollar is not really moving much. Let's take a look at what the bond yields are doing. So we had the Fed yesterday, which decided to raise rates, but they were not as dovish as you would expect. They didn't say that this is a hole. They said we'll decide in the next meeting. But that's not the point. Point is what the price action is doing. As you can see that the price action, the bond yields, we were expecting a bigger break. They did not break. But at the same time, they're not rallying either. So it's a bit of in a no man's land. What I find interesting is that the Fed chair was very clear on not cutting interest rate this year. But if you look at the Fed future, the futures right here, so you can see the expectation for next meeting again is to hold rates at 5 to 5.25%. Now going to July, there is a 50-50 or a bit more on the hold versus a cut. Now you go into September, you are seeing how the bet's changing. Now in September, this is telling us that their market's expecting a rate cut. Looking into November, they're expecting another rate cut. So, this is where just different forces are moving the markets, and you don't want to be caught in fighting the markets. This is all over the place. If we don't expect the Fed to cut rates, but the futures are telling us that that's what markets are expecting. So this is where if the economic data start to deteriorate, maybe there will be a better chance for rate cuts. But if the data gets better, then we'll probably see a rebound in a hold. So again, this is why we are seeing a lot of back and forth. Everything was doing okay last night, and then we had another regional bank that that talked about after hours possible sale. So right now that stock is trading. This is PacWest Bank on a daily chart. This is trading down about 40 to 50%, and that's really what caused a bit of a risk-off move last night, is because of another bank sort of failure. But at the same time, is the markets is the market being nervous about it? S&P 500? No. The Nasdaq? They're all sort of flat. So we're not really seeing that bearishness in the equity markets, but somehow we are seeing other markets telling a different story. Now let's take a look at gold. Gold jumped on that news last night, hit about 2080, and you can see that it's still not falling apart, maybe showing a sort of a topping sign right now. But yeah, this is this is where we are seeing more of that the fear in gold markets versus we're looking into the equity markets. And same thing with the currencies. We are not seeing the dollar acting as a safe haven currency. So question is, which currency is acting as a safe haven currency? And right now we have seen the money really flow into the yen. And let's take a look at dollar yen. I know this is a pair that Corey was watching. I was actually really like this pair as well on a rebound, but right now it doesn't seem to be happening. A rebound. I mean, I really like this, how we did pull back here. So can this pullback be bought out? And here we are since yesterday, just one way price action. Broke lower, sideways, broke lower, sideways, and broke lower. Now we're sideways again. So you want to be buying into something that's making a higher high and a higher low. This is making a lower low. So what time frame we want this to change? Again, if we go on a longer term time frame, maybe we can make a better case that this is a support level, and we could potentially see a rise from there. And that's what the daily is showing us as well. Right now, we got our resistance is still in place, but the shorter term, we have this area where we can potentially bounce from. So things look a little bit more clear on the longer term chart, but things don't look as clear when you go on a shorter term chart. So hope you can see if you can absolutely trade with the overall longer term outlook, but then you need your shorter term to kind of turn around as well. So for example, if I want to buy dollar yen, I want to see dollar yen start to rise up. That would support my outlook for what I'm looking at. But right now in the shorter term, I'm not seeing that reversal taking place. Longer term is telling me that we could reverse from here, but shorter term is telling me I'm not. So this is what you should do to sort of stay on this right side of the markets. It's very, very important to stay on the right side and not get caught up in a shorter term. And right now we're getting a two opposite picture. So which one should we trust, shorter term or longer term? You need a longer term sort of an outlook, because you want to be on the right side of the direction. Is the yen overall moving higher? Is the yen overall moving lower? Very, very important. Same thing with the dollar. Is the dollar moving lower or higher? I mean, right now you can say that dollar is not going anywhere. It's sideways. So this is why if you look at any of the dollar crosses, they're not really moving exponentially one way or the other. And that's because the direction is not there. So, you always need to make sure that you are understanding the longer term chart, and then using the right strategy and the right time frame for it. And what you see right now is a lot of back and forth. Like I said, I still will give this a benefit of the doubt that the yen is likely to roll over. So for that, stop goes right above it. So again, at this point, you can trade with a higher time frame without looking for confirmation. But then this is where just move our stop right above it. So let's say if I want to go long, dollar yen, I would just want to follow technicals. Then right here, my stop needs to be right below this area, 134.15. And if I want to go long, it needs to get above 135, at least 135, 135.15. And this is where you will find a lot of the yen crosses. The Kiwi yen. Since Kiwi is doing really well, you can see that this looks like a bull pullback. We had a massive rally, we pulled back, we made a nice little candle here, reversal candle, and it looks like it wants to go higher. So Kiwi yen would be the one that I can potentially look for buying off this bull pull, of this little pullback here. So for that, again, we need the yen to respond to the downside, and maybe that will be the trade that we'll probably see later today. But outside of that, I'm more drawn in right in the middle here. Not really sure which pairs to pick right now, because we need to see an activity, we need to see a movement to get behind it. But right now I'm not really seeing that big movement. All right, let me know if you have any questions. Hope hope everyone is able to kind of see that, you always want to trade the markets in front of you rather than what you wanted to see. And tape reading the tape, very important. Connecting all the dots, very important. It's not about what should happen and this should happen. A lot of times you'll find that it's the opposite. Like, oh, we had a rate hike from Australia. Hey, Aussie should be the strongest currency. Well, it's actually the weak. Kiwi, surprisingly out of nowhere, started to stay strong. So this is where it's better to focus on relative strength and weakness rather than what you think should happen. Same thing, equity markets, did not really fall apart, and even with this little new bank failure, it's not really falling apart. So you might think that, oh, the equity market should really pull back here, but until the price action is confirming, then you will gotta be on the sideline here. And right now you can see that the equity markets, we could potentially move lower, but at this point, we are not seeing that. And remember, we always want to make sure in the currency market that we are following where the money is going. And you can also look for trades that are reversing. So for example, Canadian dollar, it's bouncing right off the support here. As much as I hate this chart, but you notice that it's very consistent with the sort of a movement of these support and resistance levels. This is a range of our currency, and we're getting a very nice little reversal candle on an hourly chart. So maybe in the shorter term, I think the CAD could actually have a little bit of a move as well. So in that case, let's take a look at Euro CAD, and that would be the one that I can get behind as well. It seems like it's a little bit of a double top right here, or range stop at 150.75. Potentially, maybe we can take a look at CAD for the long side in the shorter term. But yeah, this is the market that you want to get in and get out, because you get a lack of continuity. When you have lack of trends, then you have to rely on velocity. Velocity mean that whichever way the move is happening. Let me use CAD as an example. On, I think, Monday, CAD had a very nice move here. So you can see that in the shorter term, like the chart looked terrible, but we got this reversal candle here. And off of that candle, we were able to rally another 0.5% from it. So again, a decent trade, right? You get in, didn't you get out? And what happened overnight? It did not hold, and it just fell right back low. So you can take advantage of these shorter term moves without getting married to a long-term outlook. I think this is the advice I will give for these market conditions. When market conditions are very bullish or bearish, you only have a +2 or a +3, then you can just play that as a one-way trade. But for now, I think this is where you're going to take advantage of the short-term velocity moves. So it looks like yen is slowly weakening. So let me talk about a trade here that I could potentially get behind is CAD yen. So CAD yen, 99, it's getting above 99. RSI is picking up. Let's go on an hourly chart. Yeah, so you can see that it's in a low base and it starts to break out here. So I'm actually just gonna do a buy stop order here, just at this point, and then put our stop right below it, which is about 98.71. So again, this is where you're playing a good risk to reward ratio rather than perfect setup. This is not a perfect setup, but with velocity, you're trying to find out what's moving. And I do like this on a shorter term for a possible reversal, especially if I'm looking for yen on the short side. Remember, on the yen, we do not want to buy until that support is reclaimed. But for the shorter term, we could see a reversal here. So CAD yen will go on my list here. And then again, I'll just move the stop as the trade is developing. So I'm just going to go get long here about 99 at this current levels. It doesn't matter. But this is where the velocity is. If it goes, it's great. If it doesn't, we'll just move on to the next one. But this is the one that, as far as the velocity goes, this is what I see moving. All right, got a question here. What do you think about the euro? I mean, you can see that in euro initially it moved lower, and it just continued to move lower. I personally think that euro could just continue moving lower, and this is what you're seeing here. There's a lot of one-way moves instead of like a back and forth. I know this is where traders sometimes find it hard to get in because you want to see a perfect setup, but it just continue moving lower. But right now, We are breaking yesterday's lows. I do like euro on the short side compared to the long side. And again, same thing. Looking at euro against the dollar, you're seeing that once again it failed to break out. So at this point, it's right at the 110 level. The next level support is at 109.60. I do not have a longer term outlook on this until we break that support level. So yeah, it's right. So as you can see, that's right at the midpoint here, or a little bit lower than midpoint. Resistance here, support here. You can say I want to trade that range, and that's okay. But that's the that's the level that you're here trading with. So again, same thing. If you like euro, this is where we can diversify ourselves, and we can look at CAD yen to the upside, and we can also look at euro CAD on the short side, with our initial stop right above this level, and our initial target will be, right around the support right here, which is our 48 area. So these are the levels that I can sort of work with here. Let's take a look at dollar yen. Dollar yen is the one that, as we discussed, we like it on longer term, not as much on the shorter term, but I am seeing a bit of a turn happening here. So it seems like right now, with the European currencies weakening, the US dollar and the Canadian dollar is catching some strength. So this is, again, I think that's a trade for today. A bit of a dollar to the upside, or even CAD to the upside. I mean, CAD looks much better here, although it's in a very weak state. But at the same time, remember, we want to get behind a move that maybe just could last for a day. But if we can get a good move, 0.5% or even more, that's not bad. That's not bad for the day. But because, again, this is where European currencies are not where the money is going. So money has to go somewhere. It's not going into the pound, and it's coming out of the European currencies. So where does it need to go? It's going to go into some of the growth currencies. So, Kiwi already looking pretty strong. Aussie's not where the money's going. So you got to see where the money's going. It looks like it's the CAD for the shorter term, and we're seeing a little bit short-term move in the dollar. And yen could potentially roll over. I think this would be a great setup if this can roll over, because we had a massive move to the downside with a massive rally here. I know it looked very extended here to get in, but at the same time, if that bearish outlook is still there, we know that Bank of Japan is not changing, and the next meeting is in June, I think, the Bank of Japan. Meanwhile, what is the price action? If the price action stays weak, then I think we can continue moving that, because it still has more room for this to follow to the downside. But at the same time, if not all currencies, if every currency is looking strong, then again, yen could be the weakest. But right now, you can see yen has a little bit of a competition. Yen has a little bit of a competition with the euro and the Swiss franc as they are weakening. So this could be a reversal candle for the short term. So let's take a look at euro yen. So euro yen, you can see that we are already testing this 147.70 area. So clearly in the shorter term, euro is where the weakness is. All right, hopefully that make a little bit of sense of what's happening in the markets. Again, today will be another day and another challenge to figure out where the market's going, especially when we are working with these very tight ranges. The equity markets failed to break out again. Yesterday was not the price action that bulls wanted to see for the breakout. Fed did not give any sort of signal that they're holding. So markets are fighting right now, as you can see with the futures. We are seeing expectation of rate cuts. They are saying no rate cuts. So this sort of back and forth continue, and this is why these news events are very important. Any news event, any economic data is important, because that really fuels that outlook. If the data start to get bad, as Fed has said yesterday, it's more data dependent. So this is where, if the data is bad, we could see the dollar taking a hit. On the vice versa, if the data is strong, then we'll probably see the dollar strengthen, and even the bond yield strengthen as well. So on Friday, we have the U.S. and Canada's jobs report. I think that will be another one to really keep a close eye on. We'll be trading live this one in the class as well, so join tomorrow and we'll go through it in the markets. But for now, I think markets are just been on a hold. I mean, even the bond yields, you can see that they're not falling apart. So again, until things really break, things are likely to just continue what they have been doing in the past few weeks. And right now you can see that if we just go with the technicals, this is just bouncing off the support, meaning that maybe in the shorter term, we will see the bond yields recover. And I think if the bond yields recover, we'll probably see that spill into the dollar as well. And if the dollar strengthens, I think then we can take a look at some of the other currencies to short it against, especially, euro dollar, or we take a look at, dollar yen. So those are the areas that we can see some kind of money flowing into. But, use your caution, use your judgment. Like I said, figure out your time frame. I am not married to a certain outlook here. So it's better to play that velocity and get out when the price action is done. If you have any questions, you can always reach out later on today or tomorrow. We'll see you again. Till then, take care and enjoy your day. Cheers.